Hello, welcome to Global Business. I am Imewore Ohiomohai. I'm standing right here in one of Abuja's busiest spots. It's called the Gudu District. We have so many markets here. We have markets for motor spare parts. We have markets for foodstuffs. We have offices. The last time we were in Wuse 2. Now we're in Gudu District. The Gudu District is not as elitist as the Wuse 2 or Maitama or Asokoro in Abuja, but at least you can get a feel of this district right here. Today, we shall be looking at the Nigerian national budget. The National Assembly passed the national budget. The budget that they say will recover Nigeria's economy from recession. So, what's this budget all about? Let's tell you the details of this budget. The deficit is 2.35 trillion naira, while we have other revenues of 277 billion naira. For FG recoveries, we have 206 billion naira. Domestic recoveries, we have 262 billion naira. For VAT, value added tax, the FG share is hopefully going to be 242 billion naira. While the federal government independent revenue is 808 billion naira. For the Federation Allocation and Accounts Committee for the year, the government hopes to get about 3.29 trillion naira. Of course, you can see all these in this graph that has been given us courtesy of budget. Welcome back. It's Global Business coming to you on your number one station, Africa Independent Television. Remember that we come to you on Mondays, 2 p.m. Nigerian time. That's within the country. And on Wednesdays, 2 p.m. Nigerian time, but on AIT International. We're still in Gudu District, right here in Abuja. Gudu is a very busy place. You can see cars passing in and out. Well, today's program will be talking mostly about the Bank of Industry. The Bank of Industry is celebrating its best performance, financial performance that is, in the year 2016. And isn't that shocking? In a year of recession, in a year when Nigerians are saying there's a lot of hunger, the Bank of Industry posted its best results ever. And so we'll be talking to the acting managing director of the Bank of Industry, Waheed Olagunju. He'll be telling us about the secret behind the success. And guess what? Waheed Olagunju was a journalist like me, and he used to do reports like me. So maybe tomorrow, I may be the next managing director, chief executive of probably the Development Bank of Nigeria. But before then, I'll talk with Waheed Olagunju. Let's give you excerpts of the Bank of Industry's annual general meeting, which held right here in Abuja.
It is highly commendable that while several corporate institutions in the country experienced a downgrade in their credit ratings in the year, the Bank of Industry got a reaffirmation of its AA plus national credit rating, accompanied by a stable outlook by Fitch Ratings, a world-class credit rating agency. Moody's, another international rating agency, also assigned AA1 NG1 rating, the second highest of three national scale rating categories to the bank. Gusto, the foremost Nigerian rating agency, similarly upgraded the bank's domestic rating of A+ to AA- in 2016. This is a testament to the strong corporate governance and enterprise risk management practices that the bank has integrated into its operations.
Mr. Wahid Olagunju, welcome to Talking Point on Global Business. Now, this is a very big year of celebration for the Bank of Industry because it's recorded its best performance ever since inception. And many would ask, what was the secret of a bank having its best performance in a year of depression? 2016 was probably the worst year for many Nigerians, and you had your best performance. What is the secret?
That's because we've been in this environment for quite some time. Yes, we've operated as Bank of Industry since 2001, and going by 2016 financial year, which meant that was our 15th financial year since we were reconstructed into the Bank of Industry from the Nigerian Industrial Development Bank in 2001. NIDB itself operated for 37 years, from 1964 to 2001. And the precursor institution to NIDB is Icon Limited, that was incorporated in 1959. So as a legal entity, we've operated in Nigeria, done business in Nigeria for 58 years. So in the last 15 years, we built on our experience that we gathered over the years, on our knowledge of the Nigerian economy, and of course, taking into cognizance the dynamics of our environment and happenings that were taking place, right, on a daily, weekly, monthly, and yearly basis in arriving at our decisions. So we have a very proactive decision-making process and a robust risk management, enterprise-wide risk management in place. And we always assume worst-case scenarios when we are taking decisions. So when things don't get that bad, they can only get better for us. So that was what happened in 2016. By late 2014, when we saw the collapse in global oil prices, we knew that it was going to put a lot of pressure on the Naira. And we started taking proactive measures because we are still largely an import-dependent country. We've not been able to domesticate our production capacities. We still depend on the outside world for a number of our inputs and even to feed ourselves. So we started seeing the gap, right, in the area of exchange rate. And we saw how the central bank was supporting the Naira. We knew that would not be sustainable. There was only a matter of time before the value of the Naira would have to be adjusted since our receipts were dropping. So while appraising projects, we look at the potential risks. We know that a number of projects are sensitive to exchange rates in this country because most of the industries still depend on foreign producers to bring in their plant and machinery. Even some of their raw materials they still bring. For example, those in the polymer space, the resins they require, high-grade resins they require, and even high-starch grade they require in the pharmaceutical industry are not yet available in Nigeria. So we knew that a lot of our projects would be sensitive to exchange rate fluctuation. So we always took that into consideration while looking at the risks that can emanate while implementing a project. I always come up with proactive mitigants against those risks. And we do this in collaboration with our customers. Although some customers do complain that we're taking them through a difficult route. But we keep telling them, look, it's because of our knowledge of the Nigerian economy. And we don't want projects to fail. Because where projects succeed, it's a win-win situation. The entrepreneur is able to honor his or her obligations by repaying, including debt service, by repaying the loans to the bank. And once you fully repay the loans to the bank, the project becomes yours for life. Because until you fully repay, the project is creditor-owned until fully amortized. So it's when you fully repay, then the project becomes yours. Because until you fully repay us, we have a lien, we have a charge on the equipment that we finance. And it's only when you finish repaying, then we discharge, then we release.
I mean, also in a time of recession, you had a drop of about 2% for non-performing loans. People will want to ask, did you actually reduce the number of loans that you were giving to people?
No, the quality of the NPLs in a given year is not a reflection of fresh loans. It's a reflection of the performance of the loans that were granted 2-3 years down the line. That's why we say that a good credit officer will not be judged by how much he's able to throw at customers in a given time, but it's how those facilities perform 2, 3, 4, 5 years down the line when they are due for repayment. So we didn't reduce.
Reduced and concentrated.
No. If you over the years, we've recorded increases in loan approvals and even loan disbursements. So we didn't reduce. It's not as if we are being choosy, looking for only the, low-hanging fruits. No, we support potentially viable projects. We didn't reduce. But it speaks to the quality of our deal flow generation, that while appraising loans, we are very, very diligent while appraising loans. And that was what I was telling you, that we also assume worst-case scenario. What can go wrong? What are the things that can go wrong with a particular project? And that's why we try to encourage our entrepreneurs to domesticate their input. Yes, plant and machinery, they could import, but in terms of their raw materials, let them increase the local content of their raw materials. Let them use local raw materials that are available in the country, in line with our commodity-based industrialization strategy, which speaks to adding value to our vast agricultural, soil minerals, and petroleum resource endowments.
You have appeared before the National Assembly answering questions on whether the Bank of Industry reaches the real sector enough. And there's been this talk of you do not reach the real sector enough. Why is this talk continuing? Why do people keep accusing the bank of not getting to the real sector?
Well, I don't know what you mean by not reaching the real sector enough. What is clear is that, yes, finance is one of the factors of production. Now, money will only go where it will perform, be there equity or debt. Nobody wants to invest in a loss-making institution. So while you are investing, you have to be diligent. You have to ensure that you lend only to loans. You lend only to customers that can repay your loans. Because when you are appraising a project, what you are doing in your head is examine the probability of that loan being repaid. So you lend to the customers with the highest probability of the loan repayment, right? So it's not as if we've not done enough. But again, you need to look at the size of the Nigerian economy. We're talking of a country with a GDP, annual GDP of more than 100 trillion. Clearly, we need to lend to increase our lending. We need to increase our support to the real sector. That's why in my earlier interview, I did say that under our revalidated strategic plan, right, between now and 2016, we plan to double our risk assets. 2019. Between now and 2019, we plan to double our risk assets, right, to about 1.3 trillion. And it is clear that our shareholders, we cannot do this on the back of the resource of our shareholders due to other competing priorities. So that's why we're looking within and out of the country to raise suitable funding that we can mobilize for supporting the real sector of the Nigerian economy. It's suitable in terms of pricing, in terms of terms, in terms of conditions, and then of course funding that have with them technical assistance component. There are a lot of capacity gaps.
The capital market?
Well, we lend at 10% maximum for long term and single digits for SMEs. You know that the NPR is already 14%, and government cost of borrowing is in the region of 16-17%. So clearly, those resources are not suitable. That's why I said suitable resources. But within the Nigerian system, there are resources that are suitable. That's why we go into partnership with some governments at the national level and at the state levels. The public sector are able to make funds available to us for on lending, right, at single digits. For example, the partnership with state governments, with the fund size is about 21 billion, and we're lending at single digits. What that means is that on the average, we are bringing 10 billion at 10%. They are bringing more than 10 billion at 0%. So the average is single digits. So these are the kind of resources we're looking at. Even at the federal level too, there are some concessional resources that can be harnessed and mobilized for real sector development. And we are speaking with relevant authorities at the federal level. And then of course, externally, there are suitable resources. The interest rates are lower, but then you have to contend with the exchange risk. But we believe that in the long term, between now and the next 10 years, we are likely to have increased stability in the exchange rate. Because over the years, it's true that in the last 31 years, SAP was launched in 1986. Between 1996 and now, the exchange rate has been deteriorating. But that was because those resources were not properly utilized. But with the increase in the quality of governance in the country today, at the federal and at the state levels, even within the private sector, the chances are that funds mobilized from outside will be better used. And when they're better utilized, they will impact the economy positively. And when they impact the economy positively, with considerable developmental impact, the exchange rates is not likely to be affected. Because if, for example, you raise foreign lines of credit to support export-based traders in the country, from their cash flow, they can repay the loans. If you support industries that are import substitution based, in other words, where we're able to produce what we consume, or what we're able to, where we're able to produce what we're hitherto importing for consumption or other purposes, we're able to produce them, that will reduce the pressure on the exchange rate as well. So that's why we have two bottom lines: financial viability and developmental impact. Yes, the project must be able to pay its way, but then what are the other developmental, what are the multiplier effects? Jobs. We look at that. Import substitution potentials, then export generation potentials, then in-country technology too. When we support projects, what kind of technology can be introduced to the country? So those are the things we also look at when we're appraising projects at the Bank of Industry.
The Bank of Industry and the Development Bank of Nigeria recently introduced into the Nigerian economy. Is there any conflict of interest?
We complement each other. I talked about mobilizing resources. They were set up they're under the CBN guidelines that were issued, I think, between 2015 and 2014. We have a two-tier DFI structure in Nigeria now. We have wholesale development finance institutions. Then we have retail. The Bank of Industry is one of the retail DFIs, along with the Bank of Agriculture, Federal Mortgage Bank, Nexim. Now, what the Development of Nigeria was set up to do is to mobilize resources, suitable resources, for on-lending to us. They make those resources available to us, the retail DFIs, and then we on-lend to entrepreneurs.
What's your vision, for the next 5 years? What are you looking at in the Bank of Industry?
The Bank of Industry should be to Nigeria what the World Bank is to the international development community. Because we have what it takes, been in operation as a legal entity for the past 58 years, to meet the development finance needs, substantially meet the development finance needs of Nigeria, particularly the real sector. So we are positioning ourselves, we are mobilizing resources, financial and non-financial, from within and outside the country to ensure that we're able to implement the industrial components of the economic recovery and growth plan that was launched recently, as well as support projects and ventures that will facilitate our achievements of the Sustainable Development Goals. And by and large, enterprises, initiatives and projects that will help achieve Nigeria's economic aspirations.
Waheed Olagunju is a name synonymous with business reporting, business journalism. You rose from being a business journalist to now success as a managing director of the Bank of Industry, because we could call this success having achieved this feat in your time. Are you saying probably that there is a chance for some of us to become MDs of banks?
As a journalist, well-trained journalist, you are equipped with skills such as quantitative and qualitative research methods. Where you have sound education, you will perform anywhere that does not require rocket science skills. Yes, it's true. I started off as a journalist. I was head of the economic desk. But I was very conscientious. I was diligent. I conducted research. My reports were based on facts. That was at the time when the Nigerian economy was undergoing adjustments. Structural adjustment program was launched in 1986, and it met with a lot of resistance. So one of my responsibilities as head of the economic desk at the NTA was to design a communication support program for SAP. And that entailed understanding the fundamentals of the Nigerian economy. How did we get to that stage in 1996 or 1986? How did we find ourselves in that position? Huge import dependence, right? Weak domestic production capacity. And that put pressure on our currency, and we had to continue adjusting the value naira from 4 to 1. Now, in so doing, I had to come up with highly educative reports, which meant studying what was going on in other countries that were undergoing reforms with the support of our development partners. Those in the Bretton Woods, for instance, the World Bank, the IFC, the IMF, even MIGA, and then the African Development Bank, the European Investment Bank, right? And even the Economic Commission for Africa of the United Nations, right? So I conducted studies into their operations. I visited those institutions. I interacted with their management staff who were recruited from other countries, from other parts of the world. So on a one-on-one basis, I had first-hand experience of what was going on in their respective countries that are undergoing reforms. So at the IMF, I ended up interviewing Michel Kamdoussou, who was the managing director. There was no way I would have been granted that interview if I didn't know my onions, because I was screened by his team. I was also granted access to Barbara Conable, who was president of the World Bank in 1989, as well as Sir William Ryrie, who was chief executive of the International Finance Corporation, and then Babaka Ndiaye, who was president of the African Development Bank, and then Professor Adebayo Adedeji, who was executive secretary of the United Nations Economic Commission for Africa, who came up to say that there were alternatives to SAP. So for you to be able to report intelligently, you need to read. And I read and read and read. In those days, there were no internets. When I go to those World Bank meetings, I bring back books that I read. So it was self-education, on-the-job training.
Okay, thank you very much, Mr.
All right, I wish you all the best. Congratulations.
Global Business. Now you know more about the Bank of Industry, and I'm sure you will want to take advantage of the opportunities that they bring to you. Are you a small entrepreneur or a big entrepreneur? You must take advantage. Just rush now to the nearest Bank of Industry in your city, state, or town. This is where we wrap it up on Global Business this day. Is it a Monday where you are, or is it a Wednesday? For me, I have some business to catch, because every day is good day for a good business. Remember, that will come to you Mondays and Wednesdays, 2 p.m. Nigerian time on AIT National and AIT International. I am Imewaro Yomokai. Have a great week. Let's go catch some business.